I suppose that there's two aspects of the story which we find really interesting in terms of what has occurred over the last couple of days. The upliftment in risk assets from this positive vaccine news has seen the US dollar perform, which is usually not what you expect. When you see an upliftment of risk positive news, the dollar loses some of that safe haven bid. But because we've seen that move up in yields and real yields as well in the US, then the US dollar has gained some ground. Now, the question is whether you believe that will be sustained over an extended period of time. At the moment, we think that the real yield relationship with the US dollar works with some lags. So if you bear in mind the fact that real yields have declined significantly in the US over the past few months, then that downward force on the US dollar is likely to prevail, in our view, over the next couple of months. You will need to see a significant change in real yields for that dynamic to reverse. So for now, our sense is that the US dollar still has more downside risk over the next few months, but certainly that move in real yields over the last couple of days is something that we need to keep a close eye on.
Okay, fair enough. Rodrigo, you are among those who has upgraded their view of the New Zealand dollar. I mean, this comes after the RBNZ decision yesterday. Do you think negative rates off the table for now? Is that part of the reason you've made this call?
Yes, we think it looks reasonable. We always struggle with this idea of negative rates because it's worth highlighting that as much as the RBNZ has stocked up the prospects, like to some extent the Bank of England has done, others that have moved down the road of negative rates haven't actually used it during the pandemic. You know, the ECB, the Bank of Japan, and so on. So we were always a little bit reluctant, but we had to accept the fact that the RBNZ was stocking up this idea that negative rates were a possibility. Now that we've seen a bit of an upgrade in terms of the economic outlook and a more clear sort of pushback from the RBNZ that negative rates are not going to be the first consideration, they're now placing a lot more importance in terms of the funding for lending and the impact it can have on credit and lowering rates for the market. So for now, it looks like a much difficult sort of scenario. It's still a possibility, but much difficult scenario. And of course, we've seen the Kiwi move up significantly, which is justified also by the improvement in the economic activity that we've seen as well in New Zealand.